Welcome, friends. Good morning. Welcome to the 8th episode of State of the Market Live. It's a fresh Wednesday morning, and today the market is waiting for the US Federal Reserve meeting. The market has priced in kind of 75 basis points hike. Though the Fed is expected to hike only 50 basis points, the market is pricing in a higher hike because of rising inflation at 75 basis points. If the Fed hikes 75 basis points as expected, nothing is going to change. We are going to remain in status quo. However, if the Fed raises rates by like 50 basis points, the market is going to take it positively and we may gap up probably about 15,951 in Nifty futures. If the Fed hikes 75 basis points, we may continue to trade in this range, or we may kind of move above this gap zone or below this gap zone. However, 15,552 provides a lot of support, and we have a key support zone at 15,522. So today night, we are at around 11:30 India time, we'll get the Fed decision. So today, we will continue to trade in this zone 1 and zone 2. We are not going to go anywhere unless large players decide otherwise. We are going to trade in this zone 1. Let's rezone the chart so that we have a better idea. So every day you have to look at the charts afresh so that you can reassess the market in a better way. So let's remove all the stuff here, and now we will trade in this particular zone today. Again, SGX is indicating an open of, let's see where SGX is. SGX is indicating an open of 708. It's very subdued. It's not going anywhere. So the players are not looking at something like 600 or 500 levels at the bottom, or 15,900 levels and above 16,600. So this is one of the most easily expectable market, I can say, because after the gap up, what the players want is kind of in decision from the Federal Reserve, and also we have Thursday expiry. But Thursday expiry is fine, it can run as per the options data. But today what the market will do is mostly we will spend time here. So again, the zone is going to be same, nothing is changing. Excuse me. So we have to again break 15,951 or 16,650. So these are the two options range the market will look to break. Again, it will try to do that. So today your strategy should be just either be range bound or go for a trend above 15,952 or 15,650. Otherwise, again, the market is going to do a kind of two-way range on the daily chart. So I will be looking for any longs of above 15,951 or below that. If your system gives intraday trades, like if you have MarketProfile and if you can play intraday levels for a few points, you can do that. That means you can scalp. But if you want a longer trade, you need to wait for break of these levels. And also what happens is, if you are an option seller, this is a nice zone. Like after the gap, the market indicated a nice zone to sell options until the event. If you are an option seller, it is better you close positions today, because the Fed event might kind of disturb your positions to force you to adjust by going to these levels or below until 15,500. Now, on the upside, we see that we have 16,146 and 16,300 as the key levels. We have moving averages. And now you see that the moving averages are bunched up. That means here you see that if we go on the upside, if we cross the barrier, we have the moving averages bunched up. We have an 8-day moving average, a 20-day moving average, a 50-day moving average, and a 200-day moving average on a daily chart. Remember this, on a daily chart. So this is the kind of area which I will look for only after the breaking of this gap zone. Otherwise, I will not even think about it. But you should keep in mind, because if the market rallies for any reason after the Fed tomorrow during the expiry day, you have to look for this zone tomorrow. And at the bottom, we have to keep in mind that we have 15,500 as the minor zone, a key support. So basically, we are very near to that. So what I am expecting today is the market can kind of fall below this level and go until 15,522. This is a very thin but very important zone on weekly chart. If you look at a weekly chart, this will be very important. Let's have a look at the weekly part. You see this? Here you see that we have a very important weekly support zone. Look at this particular zone. This kind of concession zone where there was two-way auction before we rallied is very important. So we need to, that is where we are trading. See, if you are looking at long-term charts, it's very important for you to understand what is happening on the long-term time frame. So on weekly, what you are seeing is there was a lot of congestion for almost 9 weeks. That means this is almost 2 months of data we have support. So probably the market has been respecting this zone, and this time too it will respect. But if we break 15,522, we are going to see a lot of traction here, and the next key support can be 14,076, which is a 200-day moving average, 200-week moving average, not days, 200-week moving average, which is going to be pretty crucial. That means below this, it can only be crisis. Even this level can happen only when the market accepts that we are going to hit a recession and we fall down. But that is a rare possibility. Let's look at intraday charts and again redesign our zones so that we have a clear idea of what to do today. So today, if you look at yesterday's zone, this is the zone that I will go with into the market. Mark yesterday's zone. Always remember, whenever you are going into the market, your key area, the first area should be your yesterday's range. Because unless there is a gap up or gap down, you cannot expect the market to do any magic beyond these levels. So we have to be very careful on the upside at around 877. This is my first zone today. I'll go with, and on the bottom, I'll go with 15,662. So this is the first zone I am looking at today. Now, what is the second zone I will look for? As I am looking for a downside, I will look for 15,522. Probably because of options data, we can go until 500 also. But I expect the market to not crack 522 very easily. It doesn't mean it will not, it may, but it will not be easy. What I mean by that is, if the market falls here, the market falls towards this 522 zone, there can be a decent bounce. There can be a decent bounce on the upside. Probably from 522, it can come back to 650 or some level in between. If we kind of break this zone, it is not easy to break this because we have a very good point of control from market profile at 15,770. At 15,770, and you see that yesterday we closed near the 20-day moving average on a 5-minute time frame. On a 5-minute time frame, the moving averages keep changing as you are changing the time frame. So on the upside, what we are going to do is we will look for this gap zone, which is around until 16,060. So this is my third zone that I will mark. So today, during the live market, we will see when the market begins, we will see how it is behaving in different zones. Basically, on zone 2, can I find any levels in between? Let's see. Let's make a try for that. So basically, in the past 3 days, we have seen this is the range, and let's see what can be the possible levels that we can look for on a intraday basis. So let's look at kind of Fibonacci retracements, and let's see if the market has any level in between. Nothing. So basically, if we break below this yesterday low, we're directly going to 15,522. So we have to look for intermittent levels only in market profile when it is running, when the market is open. So today our zone 1 is this, zone 2 is this, and zone 3 is this. Most probably I expect the market to again trade in zone 1 or at the max go to zone 2. But the third outside chance, that means third hypothesis, is it may go until 16,079, or it may close the gap also, but we do not have news out, so we may not move. The least probable zone is zone 3, and the most probable zone is zone 1, and zone 2 is a nice possibility. Let's look at Bank Nifty. What is happening in Bank Nifty? Yesterday we formed a doji. We do not have to redesign our chart here, because today again we may open somewhere between this zone. Anywhere we will do that. We will redesign our chart so that we can think afresh. That is very important. Every day, clean your charts and then look for a fresh outlook. That will always change the way you look at the market before open. You see that we have this gap zone. This is the first zone I will look for. So basically this is zone 1. Within zone 1, because the doji is formed, and also you see that along with doji, it is an inside bar. That means the break of this particular levels is paramount for Bank Nifty, 33,890. And the second level I have to be looking for is 33,134. So option players can start playing, option sellers can start playing in this range only for today. Tomorrow there can be a move on either side, that is 33,880 and 33,150 levels. So below this, you can go we can go all the way to 32,000 levels. Let's see if we can find any levels at the bottom. So basically we need to look for a swing high. This is one of the easiest ways to find a extension level. So in Fibonacci we can draw an extension and see if we can find any levels at the bottom. No, we do not see any levels. Basically below 32,000 you can go to these are the levels that are least important. So what this indicates to me is that the maximum the market can do now is go until these levels. So now you see that my zone 1 and zone 2 are overlapping. My zone 2 and zone 1 are overlapping. So this is my zone 1, and this is my zone 2. Don't get confused that we have the same we have with zone 1 within zone 2. So basically the market can move within this range, or on the downside it can hit 32,770 or 34,116. So once we break this level, we tend to fill this gap and get into the 8-day moving average. So here we are looking at a zone that is beyond this level also. And also you see that these are bunched up. So once we get above this zone, once we close above this 34,402, we are going to look for a move upside. But this move can happen tomorrow, not today. Today, we are going to spend time in zone 1 and zone 2. So maximum we can fall until 32,761, and the maximum we can rise is is around 34,100. You can say 34,100. So basically, if you want levels between the zone, you need to master something called market profile and order flow, which needs a lot of understanding when during the live market. Let's see on an intraday basis what it is doing. So this does not change as we have discussed. We are looking for 34,100 around these levels, 34,100, and at the bottom we are looking at 32,190. So these zones will not change. Today we may open somewhere around this level or go to zone 2 or go to zone 4 if large players want to make position adjustments at the bottom. If they become bullish, if the rates markets are lowering the probability of a higher hike, like 100 basis points hike from the Fed or any other measure, the market is going to kind of take base here. If we fall below this, for tomorrow, they are going to build a bottom for a move higher. So that's all for Bank Nifty. Now in Reliance, what is happening? Nothing has changed. We are traveling below this shorter term moving averages, which is 8-day moving average and 20-day moving average. And break of 2600 can lead to 2500. So there is a kind of 100-point change here. If it breaks 2600, 2605 or such levels, we can easily see 2500 levels. Now, a week ago, I told you that we need to finish this zone because we have been continuously rising and the market needed to clear the stops around this level. All the longs who have become late longs, who have become bullish, they would have built stops here and the market will clear them before taking its move up or move down. So we have an opportunity in Reliance. Let's look at the intraday chart so that we can assess what is happening. Nothing has changed. So you will continue to kind of play the zone 1. So like yesterday, so this is the range of yesterday. So I'll keep that as zone 1. Below that, we need to look for negativity. That means any fall, as I told you, we need to break below 26. From daily chart, it's clear that we need to break 2605 until we can go until 2580. On the upside, we need to break this moving averages. We need to break 2670. Then only we can look for levels above 2700. Otherwise, nothing is going to happen in Reliance because we will fill this gap zone only when we go above 2670. Until then, you can remain short. So even if Reliance opens and kind of goes towards 2600s, 2662 to 2670, you can short here depending on the market condition. You can short until 2680. So they will kind of look for any stops here and then come back. That's what is going to happen today. That's all for today, guys. Have a great trading day and trade safely. Be good.